Iniisip mo bang mag-average down sa iyong ipit na stock o nagdadalawang isip ka kung dapat ka nang mag-cut loss at mag-move on? Hello mga ka-Moneywise! Welcome back to my channel. In this video, pag-usapan natin ang mga strategy when it's a good idea to average down and when it's best to cut your losses and move on. Disclaimer, ang isi-share ko sa video na ito ay base lamang sa aking opinion at personal strategy. Pwedeng may ibang approach o strategy ang ibang investors. Wala pong standard procedure na applicable sa lahat. Averaging down means buying more shares as the stock price drops so that you can lower your average buy price. For example, bumili ka ng 10 shares ng PLDT at ang average price mo ay 1,350 pesos. And then, bumaba ang share price sa 1,300 pesos. Kaya nagdagdag ka ng 5 shares. Tapos tumaas na ulit, hindi ka na nakadagdag. And then biglang bumaba ulit sa 1,270 pesos. Kaya nagdagdag ka ulit ng 5 shares. So now, ang new average price mo ay 1,317.5 pesos, which is lower than your initial average price na 1,350 pesos. Tandaan, never average down blindly. You need to do your own research before you decide to average down. Before deciding to average down, you must first understand bakit bumagsak ang stock price. Kasi not all price drops are the same. Yung iba temporary lang due to market fluctuations, while others could signal deeper issues. Sometimes a stock price drops not because of problems within the company, but due to overall market sentiment. Some common reasons include overall market downturn. Pag yung entire stock market declines due to economic concerns or global events, maraming stocks ang pwedeng maapektuhan kahit solid ang fundamentals nila. Puwede ring maka-affect kapag may negative news tulad ng missed earnings expectations ng isang company, investors might panic sell. Pero kung hindi ito long-term threat, pwedeng mag-recover agad ang stock price. Another is overreaction from news. Minsan masyadong nagre-react ang mga investors sa balita due to fear, and then stock price may drop even if its fundamentals remain strong. Another example is outflows ng foreign fund, pero hindi ibig sabihin na may problema ang company. It is usually a good idea to average down when the stock you're averaging down on pays dividends, gaya ng dividend stocks and REITs, at kung meron kang long-term investment horizon. But only if the company's fundamentals are still strong and the stock is just experiencing temporary market fluctuations. Kasi you can buy the stock at a discounted price as long as happy ka sa dividends na binibigay ng company, sustainable ang dividends, and the company is not expected to suddenly cut the dividend, then for me, it's a good idea to average down. I invest in stocks with good fundamentals, solid ang earnings with sustainable dividends sa aking dividend portfolio. Kaya pag nagkakaroon ng market fluctuations at bumababa ang share price ng dividend stock or REITs na hawak ko, I add more shares. Basta may buying power ako and my portfolio remains balanced. I avoid over-concentrating my portfolio in a single stock. So don't put all or most of your eggs in one basket. Pwede rin mag-average down sa mga growth stocks only if the company has strong fundamentals and it's just experiencing temporary market fluctuations and you believe in its long-term growth potential. If the fundamentals remain strong, then the stock price will recover. Averaging down is not a good idea if the company's fundamentals are deteriorating. Example, declining ang earnings ng company o kaya lumalaki ang utang and patuloy na bumababa ang share price. Averaging down can amplify your losses. Pero pag ang company has a recovery plan or strategy para makarecover, mas maganda muna maghintay ng signs of improvement bago mag-average down, gaya ng improved earnings and positive news. Pag may catalyst, gaya ng magandang earnings, the stock price will likely follow. Magiging stable na ang share price, hindi na downtrend, at magkakaroon na ng upward momentum. Kaya pwede ka nang mag-average down pag meron ng signs of improvement. So bakit kailangan maghintay? To minimize risk and help you avoid throwing more money into a losing position that may continue to decline. Sayang din ang opportunity cost na pwede mo magamit sa ibang investment opportunities. When to cut your losses? For dividend investors, pag nag-stop magbigay ng dividends ang company, it may signal financial trouble. Red flag ito, especially for dividend investors who rely on passive income. Another one is pag consistently declining ang earnings quarter on quarter, this indicates that the company is not growing o may problema talaga sa company. So kung tuloy-tuloy ang pagbaba ng earnings, lalong babagsak ang stock price. Kung sobrang taas ng utang ng company at nahirapan itong bayaran ng interest o principal, this makes it a riskier investment. Another one is pag nawalan ng competitive advantage due to competition, this could also lead to declining market share and earnings and declining stock price. If the company is struggling pero walang clear strategy or plan to turn things around, it might be time to cut your losses. Without a solid plan for recovery, pwedeng magtuloy-tuloy ang pagbaba ng stock price. Kaya you should consider cutting your losses as early as possible to avoid further losses. Anong gagawin pag hindi ka nag-cut loss and you're just holding on to a losing stock with a big loss? Ang tanong is, do you still believe in the company's long-term potential? If yes, you may consider holding or even averaging down at the right time. Pero kung walang initiatives o recovery plan and walang clear growth potential ang company, baka mas maganda ng mag-cut loss at ilipat ang funds sa ibang investment opportunities. Sayang din ang opportunity cost. Kung meron kang hawak na ipit na stock, you have a few options. Pwede mong i-hold if the company's fundamentals remain strong and you believe in its long-term growth potential. Pag nanghihinaing ka sa losses mo, pwede ka maghintay na makarecover ang stock. Pwede ka ring mag-average down if the decline is due to temporary market fluctuations and fundamentals are still strong. However, if the company's fundamentals have weakened and recovery looks unlikely, it may be better to cut your losses and reallocate your funds to other investment opportunities. So don't be afraid to cut your losses if necessary. At the end of the day, it's your investment, so you have to make your own investment decision.